Good morning and welcome to the Options Trading for Income Weekly Update with Locke and Your Success. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, be aware that the risk of loss in trading options is substantial, and make sure you're aware of all your risks prior to placing any trades. And also note that we are using hypothetical computer simulated trades in this presentation, and they are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come over to our mailing site, our website, join our mailing list, get your free report, the 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. Also check out our programs. We have the super simple spread trades, we have the M3, we have the Bearish Butterfly, we have the Rock, the M21, and APM squared, again, is now available. We're running a special promotion on this, 10% off until August 5th. If you are interested in the program, I suggest you go ahead and take advantage of that before that time. And also stay tuned for our programs that are currently under development. We have the Trading Triangle book that's coming out later this year. We have our online Trading Triangle program, which I'm currently working on, and we got some directional spread to trade things as well. And as always, let us know how we can best serve you in your trading. So another thing which I constantly in the past have forgotten to mention is that we do a live trade review on Monday mornings. It's a $1.25 million M3 style trade. We do that for Options Tribe Premium members. And when people find out, they say, well, why didn't you tell me? And it's like I said, it's because I forget. So I just added a slide in here. We review that live trade. We have a question and answer session, and that's at 10 a.m. on Monday mornings. That's after this particular webinar. And if you'd like to join the Options Tribe to get access to that, there's the website there. So you can go ahead and do that. And also remember to bring your results in for our Lockup Hawaii 2016 challenge. I think we have 30 traders so far that are involved in this. And again, this is just a competition against yourself, more or less, to come in and have some fun with trading. All right, so let's take a look at how things are going here in the markets. So last week, even though on Monday in the morning when we did the webinar, we were experiencing a decent sized gap down in the futures. In other words, the futures were way down. We were expecting an up move last week, and it's not too surprising. We came down to our more dominant support level here at 1210, and we had a decent bounce during the week. So this is all well and good. So from here, what I expect? I would expect that the market continues higher, at least to this 1255 level. So if we look at the SPX, it's very likely it's going to at least remain in this channel and probably try to test the top of it. As it does that, it's probably going to bring the Russell up to around the 1255 area. The Dow, I mean, it's downtrending slightly here shorter term. Longer term, we are still uptrending. And eventually, if we look at the NASDAQ, I am still expecting the NASDAQ to go to 4835. I do believe that that's going to pull the Dow up to its previous all-time highs, and it's probably going to break the SPX and the Russell higher during that period. So longer term, I am still bullish. I do think the markets in general are going to go up. I don't know that the Dow is going to make new highs. It may be topped out for now, but I do think that the NASDAQ and the Russell are going to be a bit higher. Once we hit up into this level, we are looking at some major price pattern resistance, long-term price pattern resistance on the Russell, particularly if we get up to this 13, anything really much over 1340, 1350 area. We're looking at some major headwinds there in the markets as far as that goes. And from there, we are overdue for our very, very large down move, which is likely to pull the Russell down to around 850. So shorter term, we are still bullish up into this range here with the Russell up to all-time highs in the NASDAQ, at which point we're going to be, or at least I'm going to be very, well, put it this way, I would expect to see the Russell down in the next year and a half or so, within the next year and a half, down to 850. So that's, and it's going to happen relatively fast like it did here in 08. And if you go further back in time, it did here in this range here. So that's those are my thoughts on short term and long term on the market. All right, so let's go and take a look at what our positions are doing here. Let's start with our M3 trade. So here, as of Monday, we are over our maximum delta range. We are actually underneath our lower short strikes. And we have a position that looks like this. Obviously, we're taking on a lot of downside risks should the market continue. So this was rolled back to 1190, which is standard operating procedure for an M3 trade. So we roll the butterflies back to the 1190. And we are also added in 5 1190 1200 verticals, 5 1190 1210 verticals. We put this into a position that looks like this. Still remaining positive delta. As the market took off later in the week, on Wednesday, I actually added 5 1200 1210 verticals to bring us into a position that looks like this. And I did that because of, let's just come back here. We had a maximum negative delta number that was exceeded the edge of the tent. So I went ahead and just made a minor adjustment to cut that down under 75, which just brought us down to about minus 57 by doing 5 of those. On Thursday, the market continued up. I did 5 12 10 12 20s. Again, because of positive delta limits. And that brought us down to, well, let's go do a before and after here. So before we're at minus 80. Again, we're kind of at the edge of the tent, and I just did a minor adjustment here and brought 5 verticals up to 1220. And that brought us down probably a little flatter than I'd like, minus 37. But I wanted to keep this in chunks of 5 as much as possible. And coming to Friday, there were no further adjustments. This is what we look like here on Friday. So we're looking at a nice looking M3 trade. We have a nice flat T+0 line still. Looking really nice. All right, so question, in light of the big move, will I be changing my setups? I'll be changing my setups. Actually, a quick question. I guess you would, you won't be able to hear me, but it does. Is the sound coming across okay? I just had one person who had lost sound. I want to make sure that's not a lot of people. Okay, okay, great. Sounds like most people have sound. Super. All right. So, will I be changing my setups with my changing opinion on the market as it comes down? Well, it depends on the trade I'm doing. In the context of the trade updates, we're going to be keeping the setups exactly the same. Should we get a very large down move, you will see how they react. The positions in general, with the exception of like a V Condor, the V Condor does not do well in harsh down moves. But M3, Bearish Butterfly, rock trades, they do perfectly fine in a move like that. So, so you'll see that. We may have a loss, because what tends to happen when the market tops out is people get very, very bullish. We start hitting all-time highs. We start to get that crazy delta skew like we got in 2013 where the options pricing. It's really, really weird. And that kind of forces us into M3 positions that are a little bit more on top of the market. It tends to force us into bearish butterfly positions that are a little more on top of the market. Depending on the timing, when things start really dropping out, we're going to get a loss. A lot of times we're going to get a loss on the month where the process starts, where you get your large volatility increase. And basically the structure of the options change. The options chain changes. You're going to get usually a loss that month if you're near expiration. And it should be a normal loss. It shouldn't be anything crazy. You just experience a normal loss that month. That would be typical. And then once the options chain structure changes, then we're going to just trade normally, and the strategies should do perfectly fine. There should be no difference. So the answer to your question is no, I'm not planning on any changes to my setup, unless, of course, from a live trading standpoint, I see something in the technicals that indicate to me there's a strong chance that the move is just completely topped out. But in general, we don't know exactly when the down move is going to start. It could be, anywhere in a year's period, and I'm not going to change my trading style, because if I change my entry setups or my trading style to do something that I'm predicting the market's going to do, I could lose for months waiting for that to actually happen. And I'm not going to do that. I'm just going to play the market as it lies and play it normally, realizing that month that actually does occur, it's probably going to be a losing month. But once the options chain structure changes, then the positions are just going to act normally, and they're going to be fine. So okay, moving forward. By changing setup, do they mean win with? I don't know exactly what they mean, Ray, when they ask me if I'm changing the setup. But I was just, in any sense, I'm not going to be changing it anyway. So anyway, that is the M3 trade. Of course, the bearish butterfly for August has already been closed at about a little over 20% profit of planned capital, because we were entered 1/3, so that's closed. We have an August rock trade, so let's take a look at how that trade's doing. If we come back to last Monday and we go to the rock trade, this was actually entered in rock position. And as of Monday, it looked like this because of the down moves that we've gotten since we've entered the trade. And a fairly large down move on Monday, we're way over our maximum delta. Now, I'm typically not going to adjust this intraday, so we just came to the end of the day, and we're more than twice of our maximum delta limit. Rock guidelines just dictate that we roll back these 1230s, 20 points to 1210, and so I went ahead and did that. That put us underneath our maximum delta, and it put us into what we call a rock half entered with one rollback, which is a less volatility or price movement sensitive structure. We're just preparing ourselves for more volatility should the market continue down. Of course, the market did not continue down, and therefore no further adjustments were needed. So we will just, let's see, push this all the way to Friday. I'll show you how we look by the end of the day Friday. With the volatility lightning, this came back. We're up about 5%. In this new structure, should we stay in this structure? In other words, if the market settles back this week and we end up kind of up around $5,000 or 10%, a normal rock trade profit and loss or a profit target is going to be 20%. If it's in rock position, a normal profit target for a rock trade, if we're in an M3 type of a position or a cat position, is going to be more in the 10% range. Rock half rollback, realistically, if I get over 10%, I'm happy with that and I'm willing to move on. So we'll see if we get back into that, and we may actually end up pulling this trade off this week. If the market continues to grind up as expected, then what we're going to do is we're going to end up just rolling these 1210s back up to 1230 and trade this as a normal rock trade once again. So that's the plan going forward. Here's how we currently set. Let's see here. Those are 3 of the August trades, and the last August trade we have would be the August V Condor, which does not like these down moves with volatility increases. Let's show you the August V Condor as of earlier in the day on Monday. This is the position that we were sitting in. Realistically, we're only allowing positive 50 delta here. If I told you last week, if this continued down, then we'd essentially be trading ourselves out of this, which is what happened. The market came in, we were over our maximum delta limit here. In order to correct that according to these guidelines, I'd be doing something like that. This would be putting us in a situation where we really don't have any more money to make. There's really not much reason to stay in. So I ended up just closing this trade for a loss on Monday. So let me clear this out. First loss of the year for the V Condor. So it's actually been performing very, very well this year. So this is not a big deal, and it's only a very minor loss. So if we look at our reports here, we're looking at a 26.41 loss, which is about 5.5% or so. So this is, like I said, very well performing trade for the year, but doesn't like this type of an environment. So that's where we end up here. That is everything in August. If we take a look at what we got going on in September, we have a September bearish butterfly that's happening now, which, oh, I'm having an issue with BackTrader here. Let me see if we can get back to today. There we go. So bearish butterfly for September has had no adjustments. We simply had our entry on the 24th. Of course, we were up money when the market backed down some. Now we're just slightly down a little bit here. Oh, actually, let me go to, yeah, the 31st. That was Friday. And this is where we look now. So we're at minus 125 delta. We're at 89 theta. We are getting close to a suggested delta theta roll, where we would roll our 1190s to 1210. I'm sorry, our 1200s. They're 1200 butterflies, right? So we roll our 1200s to 1220. And then we're going to start scaling into the 1240s and then the 1260s as the market continues up. So no moves there on the bearish butterfly. All right, so I just have a question here. It says, at what time is it preferable to have concerns with a bearish butterfly regarding an up move in general? And with the current September bearish butterfly, 36 days to expiration. With the current September bearish butterfly, as we are only 35 points from the bottom of the last 6 months. Well, those are questions that you need to answer prior to entering the trade if you're going to modify the trade guidelines. According to the trade guidelines, we're not doing anything here. If we start getting this delta theta ratio issue, then we're just going to roll up 20 points. And yes, that as we get closer to expiration, that does begin to make us, not so much at 49 days, but certainly you get up into the 20-day to expiration level, or under 30, or really low volatility. That does put you in a particularly vulnerable spot of a larger up move. And if you're just following the guidelines, then there's really nothing to do here unless we start to hit delta theta guidelines, in which case a lot of times if I'm 1/3 entered, I'm not even going to roll it up. But if I'm over 1.5 to 1 for an extended period of time, I will roll it up. I'll go ahead and do that. So from a straight bearish butterfly context, that's all we're doing. If you're doing some other plan, in other words, you don't necessarily have to, in your trading style, I have a lot of people who modify the bearish butterfly to their market opinions in one way or another. If you want to modify the trade to do something different, then you'll want to do that prior to entry. Make some sort of a plan, as in like an M21 program type of plan where, hey, if the market sits here, at some point I'm going to do something. For me, it's not preferable if I'm a bearish butterfly trader and the market's just been kind of hanging here for the last 10 days or whatever, which it's been doing. I'm not really interested in doing anything because I'm a bearish butterfly trader. I'm going to let the trade go out. If I made an M21 trade and I look at the market and I say, well, I think, and this is not what I said necessarily, but if I think that, well, the market is going to continue to climb and be up in this range, maybe, if I want to, in other words, maybe I entered it back here when we're at the bottom. This is not a good bearish butterfly entry. This, I think, might have been 56 days. It may have been here. This is not a good bearish butterfly entry because the market's been down so much. We're at the bottom at a support level. The market's likely to bounce a lot. So I might be saying at entry that, hey, I don't like the bearish butterfly trade here because the market's been at a support level. If that's the case, then you would make some sort of a modified plan before you go in. Maybe you could trade an M3. Maybe you could trade an M3 and plan to switch into a rock trade or something along those lines, which is all perfectly fine. What you want to avoid doing is making a moment-by-moment decision when you have money in the market and now it's not doing what you want, and now I'm just going to make irrational decisions because of whatever, right? So from a conceptual basis, I mean, that's how I would answer your question. If you're either going to trade the bearish butterfly trade as is, or you're going to trade the bearish butterfly trade and take technical analysis into consideration and make that plan before you go in. So if I was on this day, for example, and I was a bearish butterfly trader, and I wanted to do take into account that the market might move up. In other words, I don't know if the market's going to break down. I don't know if it's going to bounce, but if this certain scenario happens, I'm going to switch over. So I might enter my bearish butterfly here at, say, 1200 or 1210, and if the market breaks down, then that's fine. It's not a problem for the bearish butterfly. But if the market comes here and it bounces, then I might say to myself, well, which I would do, by the way, make the assumption that we're going to maybe 1280. So under those situations, I might say, I'll enter as a bearish butterfly, but if we bounce, I'm going to convert this into an M3 trade. And then I would make a plan to accommodate that conversion. I would say, okay, now I'm going to put a delta limit of, say, minus 150 on my trade. And so instead of scaling into the upside, I'm going to enter as a bearish butterfly, but to the upside, I'm not going to trade it like a bearish butterfly. I'm going to convert it into an M3. So that's what I would do if I planned that. So hopefully that makes sense. The important part when you start trading and you're going to do technical analysis stuff is to make sure that you are making your plans before you enter. Take a look at the market. Look at the possible scenarios that might work their way out going forward and make a plan for them, because you don't want to be making those decisions while they're happening. You want to make those decisions before you enter. So that's the important thing there. All right, so that is all we have for a bearish butterfly. September M3, there were also no adjustments here. Remember, a little heavy on the butterflies just because of the volatility levels on entry. They allowed me to do some extra butterflies. This is our entry position. There was nothing done from there. Here is what we currently look like. Here is the T-log. Again, we'll be looking at adjusting this if the market starts to grind up. And last but not least, we do have the September V Condor, which again, last week I entered the wrong month, so I went back in time. I re-entered this at the right time. Entry looked, let me go to the V Condor here. Go to the T-log, 7/17 would have been our entry date. So quickly go back to that, which is essentially after July expires. We come in, we do about a 10 delta put. We do our 10 delta calls. We do 30-point wings. We put in a straddle here, and it would look like that. So that all looks good, and that all looked really good until last Monday, where the down move put us over our maximum delta limits. We had to come in and buy back 2 of these 1160 puts, because we look like this here. Let's buy back 2 of those. Again, you know, the down move with the volatility increase, a condor type of trade doesn't typically do very well in that environment. There are a lot of adjustment strategies that you can do. When I make the V Condor up, this is essentially designed to be a trade that wins most of the time, but if it doesn't it never takes on a whole lot of risk. So what people tend to do when the market comes down is they roll the whole trade down and they restructure everything, sometimes double up on size, which probably 70 or 80% of the time actually works, and they may actually take some sort of a win. The other 20% of the time, however, what ends up happening is traders take devastating losses on these condors trying to make them win. So the concept behind this is, hey, the market's not cooperating, we take a small loss, but 90% of the time we're going to do perfectly fine. So in certain situations like we had in August, which are winnable if you take on a bunch of risk, and that's okay for some traders if that's the way they trade and they're appropriately sized in their portfolio. But if you have a huge amount of money in this, I find longer term you're better off just to let that trade take the small loss and move on. So that's the way that this trade in general is designed. So I get the questions, are there things you can do? Yeah, there's a ton of stuff that you can do that you'll probably make out, but longer term, to avoid these huge losses that come with most condor type strategies, this is typically better for most people. So anyway, what we did here is we bought back 2 of these shorts. And then of course we had the bounce. So let's show you where we are today with the bounce. We are a little bit negative theta. We are, which is okay in this particular trade. We don't get that concerned about that. We look at this, we're in this position here. So if the market does what it has been doing and it creeps way up into here, then we may do something. But this is probably a break-even trade at best for the month. This month, we'll see how that works out. But again, that is the V Condor, and all the other trades at this point are doing quite well. So as there are no other questions, I will, and if you're, like I said, if you're interested in watching that live trade, $1.25 million on Options Tribe, go ahead over there and you can join that. I'll be doing that at 10 o'clock. So have a great week, everybody trading, and I look forward to talking to you next week.